There's a famous saying in the world of investing: history doesn't repeat itself, but it often rhymes. For centuries, financial markets have witnessed some of the wildest booms and busts. Fortunes have been made overnight, only to disappear just as fast. The excitement, the greed, the fear, it's a cycle we keep seeing, over and over again. From tulips in the 1600s to the dot-com stocks of the early 2000s, history has seen financial bubbles form, expand, and eventually pop, leaving devastation in their wake. But here's the question that matters today: is Bitcoin following the same pattern? Or is it truly a revolution that will change money forever? To answer this, let's take a deep dive into the biggest financial bubbles in history and uncover the patterns that could tell us whether Bitcoin is destined for greatness or collapse. Tulip Mania, 1637. The world's first financial bubble. The Dutch Golden Age saw the emergence of one of the strangest economic events in history: Tulip Mania. Tulips, once a rare flower imported from the Ottoman Empire, became a status symbol among the wealthy in the Netherlands. As demand grew, prices skyrocketed. Soon, tulips were not just flowers, they became an investment vehicle. At the peak of the bubble, a single rare tulip bulb was worth more than a house in Amsterdam. How did this happen? The Netherlands was one of the most economically advanced nations of its time, boasting a sophisticated trade network and a newly wealthy merchant class eager to invest. Tulips became a highly sought-after luxury item, and people believed they would always be valuable. As more people invested, the prices climbed. Farmers, artisans, and even laborers joined in, using their savings or taking out loans to purchase tulip bulbs. Speculators entered the market, further inflating prices. The emergence of futures contracts, where traders agreed to buy tulips at a later date for a set price, only fueled the speculation further. The collapse. A panic sell-off in early 1637, confidence faltered when buyers hesitated to pay record-breaking prices. Suddenly, sellers outnumbered buyers, and panic set in. Prices plummeted overnight, leaving many investors bankrupt. The once thriving tulip trade collapsed, and thousands suffered financial ruin. Could this happen again? Tulip mania was driven by speculation, FOMO, and irrational expectations, the same psychological factors that drive many modern markets. Bitcoin could suffer a similar fate if hype outpaces its fundamental value. The South Sea Bubble, 1720. The illusion of guaranteed profits. The South Sea Company, granted a monopoly on trade by the British government, became the focus of speculative frenzy in the early 1700s. Investors, believing in massive profits from South American trade, rushed to buy shares, pushing the stock price to absurd heights. The rise of the South Sea Company. The South Sea Company promised incredible returns through exclusive trade rights with Spanish-controlled South America. However, these claims were exaggerated, and little actual trade ever occurred. Despite this, the hype was enough. The company encouraged speculation by allowing investors to buy shares on credit, making it easier for anyone to invest. The stock price soared tenfold in a matter of months. The collapse. A market crash as reality set in. Investors began questioning the company's actual profits. Panic took over. Investors rushed to sell their shares, causing prices to collapse dramatically. The British economy was thrown into chaos, with many people losing their life savings. Could Bitcoin face a similar crash? Some argue that Bitcoin's meteoric rise resembles the South Sea Bubble, where excitement drove prices beyond reasonable levels. However, unlike the South Sea Company, Bitcoin does not rely on corporate promises and has a decentralized structure that may help sustain its value. The Mississippi Bubble, 1718-1720. France's economic disaster. The early 18th century saw one of the most dramatic financial collapses in European history, known as the Mississippi Bubble. This crisis was fueled by speculative investments in the Mississippi Company, which promised vast profits from French territories in North America. The rise of the Mississippi Company. At the time, France was struggling with national debt, and Scottish economist John Law proposed an economic system based on paper money rather than gold and silver. Law established the Mississippi Company, which controlled trade in the French territory of Louisiana. He convinced the public that Louisiana was filled with untapped riches and vast economic potential, leading to massive speculation. The French government encouraged investment, allowing people to buy Mississippi Company shares with paper money issued by Law's Bank. Investors believed they were on the verge of extraordinary wealth, and as demand soared, the stock price skyrocketed. The collapse. Hyperinflation and panic. However, the riches of Louisiana had been grossly exaggerated. As speculation grew, inflation spiraled out of control, and when people lost faith in Law's financial system, panic set in. Investors rushed to sell their shares, causing a total market collapse. Law was forced into exile, and France suffered a financial crisis that lasted decades. Could this happen again? The Mississippi bubble serves as a warning about overhyping investments based on unverified potential. Some argue that Bitcoin and cryptocurrencies could face a similar fate if their price remains speculative rather than tied to real-world use cases. The housing bubble, 2007-2008, the global financial crisis, one of the most catastrophic financial collapses in history. The 2008 housing crisis was fueled by irresponsible lending practices, subprime mortgages, and Wall Street greed. How it started: banks and lenders offered subprime mortgages to borrowers who couldn't afford them. Housing prices skyrocketed as demand surged, creating an illusion of endless growth. Investment banks repackaged these risky loans into securities and sold them to investors worldwide. The collapse. A global recession. When homeowners began defaulting on their loans, panic spread. The entire financial system collapsed, leading to the worst global recession since the Great Depression. Major institutions like Lehman Brothers failed, and governments had to intervene with trillion-dollar bailouts. Could Bitcoin cause a similar crisis? Some argue that Bitcoin's extreme volatility could cause systemic financial risks if major institutions invest too heavily. However, unlike subprime mortgages, Bitcoin isn't based on debt, which reduces its risk of triggering a widespread credit collapse. The Japanese asset price bubble, 1980s-1990s. Japan experienced one of the most dramatic financial bubbles in modern history. Fueled by speculation, excessive bank lending, and overconfidence in the economy, Japanese real estate and stock prices reached absurd levels. The rise. Japan's economic dominance. By the 1980s, Japan was an economic powerhouse. Real estate and stock values soared as investors believed the country's growth would never end. Banks freely lent money, encouraging businesses and individuals to pour capital into real estate and the stock market. At its peak, the total real estate value of Tokyo was greater than the entire United States. The crash. The lost decades. In the early 1990s, the bubble burst. Stock prices plummeted, real estate values collapsed, and the Japanese economy entered a prolonged period of stagnation known as the lost decades. Could this happen to Bitcoin? Some economists warn that Bitcoin's meteoric rise could mimic Japan's boom and bust cycle if speculative interest outweighs real-world utility. However, Bitcoin differs because it isn't tied to national economic policies or debt-driven bubbles. Bitcoin. The next bubble or a financial revolution? Bitcoin's price history has shown extreme volatility. From a few cents to $69,000, down to $15,000, and up again. Arguments for Bitcoin being a bubble price surges are fueled by hype rather than widespread adoption. Many investors do not understand the technology behind Bitcoin. Government regulations could severely limit its growth. Arguments for Bitcoin as the future. Unlike speculative bubbles, Bitcoin is scarce. Only 21 million coins will ever exist. It is decentralized and not controlled by a single entity. Major institutions are investing billions, showing confidence in its long-term value. Final thoughts. What happens next? History has shown that bubbles burst, but sometimes the underlying technology reshapes the world. The internet bubble burst, yet the internet remains a global necessity. Could Bitcoin follow a similar trajectory? What do you think? Will Bitcoin be a game changer or just another historical bubble waiting to pop? Let us know in the comments. And if you enjoyed this deep dive, don't forget to checkmark like the video, checkmark subscribe for more, checkmark hit the notification bell because we'll keep bringing you the biggest financial secrets the world has ever seen. Thanks for watching. Rocket Money Bag.